This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
How about them apples? Apple beats the street with strong demand for its iPhones and says next quarter will be even better than it expected.
Third quarter earnings were disappointing. They weren't what we had expected. And we saw some slowdowns.
Big blue bummer. IBM's latest earnings were not what the CEO expected. She also ditched the company's profit roadmap, dumped its chip unit, and by the end of the day, the stock had its lowest close in 3 years.
But should you own it? Should you buy it now? One of our Market Monitor guests who recently recommended IBM shares is back to answer that question again tonight. All that and more on Nightly Business Report for Monday, October 20th.
Good evening, everyone. A lot of buzz on Wall Street today about the disappointing earnings from tech bellwether IBM, sending shares of Big Blue tumbling and nearly wiping out the modest gains made in the Dow today. But we begin tonight with the after-the-bell earnings from another tech giant, Apple. And it was like night and day. Apple trounced Wall Street forecasts thanks to blowout sales of the new iPhone 6, more than 39 million units, and the best quarter ever for sales of its Mac personal computer. Apple earned $1.42 a share in its fourth quarter, easily beating estimates of $1.30 a share. Revenue of more than $42 billion was 12% higher than a year ago. It also topped forecasts. Apple also raised its guidance for the full year, and its shares rose in after-hours trading. In the regular session, Apple was up 2% to $99.76. Josh Lipton spoke with CEO Tim Cook earlier today, and Josh joins us now from outside of Apple's headquarters. So, Josh, now that you've looked over the numbers, what's the big takeaway from these amazing results?
Well, I think the big numbers certainly analysts and investors are going to concentrate on would be the iPhones. Of course, the iPhone still does account for about 50% of the company's revenue, and Apple telling us they shipped 39.3 million iPhones this quarter. That was up 16% year over year, and it beat Wall Street's estimates. I did have the chance to sit down with CEO Tim Cook, and I did ask him specifically about the iPhone 6 and 6 Plus. Remember, this quarter includes 9 days of sales in 10 countries for those new iPhones. Cook telling me he saw demand there off the charts and that he was very excited, he said, also about the initial rollout of those new iPhones in China. On the other hand, though, the iPad, remember, that accounts for about 20% of revenue. Their shipments were down about 13% year over year. Back to you.
All right, Josh, that's really amazing. 9 days and those great results. Josh Lipton in Cupertino, California. And Josh will be back later in the program with a look at the launch of Apple's new mobile payment service, Apple Pay, how it works and the challenges it faces.
It was a good day on Wall Street and a quiet day for a change, with the price of oil holding steady, fears about Ebola's spread subsiding. As we mentioned at the top of the program, the one thing, though, that did unsettle the market today was IBM, specifically its soggy earnings report. Because of its high price, IBM is one of the most heavily weighted components of the Dow Industrials. And today, its slide, IBM's that is, kept the Dow in the red for most of the session. And then at the close, sandbag gains that woulda, coulda, shoulda been higher. Here's how things looked at the closing bell. The Dow did manage to finish up by 19 points. The NASDAQ by a heftier 57, a jump of 1 1/3%, and the S&P 500 added 17. It closed back above 1,900. And after all that market turmoil last week, this marks the third straight day of gains for NASDAQ and the S&P 500.
More now on that big miss for IBM on both earnings and revenue. Shares fell more than 7% today, and as Tyler just said, easily making it the biggest decliner in the Dow. Morgan Brennan takes a closer look now at the troubles at IBM, what's driving the slowdown, and how it's getting rid of one of its struggling divisions.
IBM has been struggling to reinvent itself as it shifts away from hardware to newer, higher growth industries like cloud computing. But today's quarterly earnings did little to assure investors the massive, years-long transition is going according to plan. Big Blue's profit and revenue sharply missed analyst expectations, thanks to slowing sales in hardware and services. The company also announced it's scrapping its 5-year plan to grow profit, an ambitious goal that was supposed to be realized next year.
IBM, unfortunately, is saddled with 2/3 of their business that's incumbent. It's very difficult to make that pace of change at a pace that investors are going to be happy with. So this is going to be a story we're probably going to be talking about for a while.
The report marked the 10th straight quarterly drop in revenue for IBM. But the company also announced it's shedding another hardware business, microelectronics, or its semiconductor manufacturing operations, in an unusual deal that will pay chipmaker GlobalFoundries $1.5 billion to take that business on. Analysts say that plan rids IBM of a lower margin, long-struggling segment, but that the company still has a very long way to go, especially since profitability is falling in IBM's other ongoing businesses as well.
The software business didn't grow as fast as expected, and hardware continues to be hurt by commoditization. Those businesses are moving more towards a even steady state. The comps are getting a little bit better in some of those businesses, but they're still challenged.
CEO Ginny Rometty says she's, quote, disappointed in the company's performance, blaming a slowdown in client buying behavior and, quote, unprecedented pace of change in the industry. The company now plans to offer a new profit forecast in January. For Nightly Business Report, I'm Morgan Brennan.
And one big shareholder in Big Blue today, billionaire investor Warren Buffett. He's one of IBM's largest shareholders. And with today's sell-off, it's estimated that Buffett may have lost more than $1 billion. Tyler?
Our David Faber sat down with IBM CEO Ginny Rometty today at company headquarters in Armonk, New York. And despite those earnings and the sharp drop in share price today, Rometty sounded upbeat about where the company is focusing its efforts right now.
We're reshaping this company around analytics, around cloud, and the term I use, engagement, social, mobile, security, but all for the enterprise. Collectively, almost 20% growth, improved every single quarter, and even individually, each of those areas. Analytics, which ended last year at $16 billion, up in total 8%, a very large number. You take a look at cloud, greater than 50% again, and then social, mobile, security, every one of them.
David Faber is here with us now with more on his exclusive conversation with Ms. Rometty. David, welcome. Good to have you with us. How big a test is this for Ginny Rometty? Is this her first big one? Is her job at stake here if she can't turn it around? What?
You know, I don't think her job is at stake at this point, certainly, Tyler, but I will say that there's no doubt that this is Ginny Rometty's IBM. In fact, you could argue that the disavowing, if you will, of the roadmap that was put in place, that 5-year roadmap that they tied themselves to for many years, which was originally put in place by her predecessor, Sam Palmisano, that in a sense says finally we're done with the previous administration in any way, shape, or form. The divestitures, of course, that she has focused on, the low-end server business, the one announced today, of course, where they're actually paying to get rid of the microelectronics unit, and all of the things you heard in that interview that she just mentioned. Those are her decisions, and time will tell whether they are successful.
You know, David, we've seen a number of tech companies like Hewlett-Packard, like eBay, that are splitting themselves up. Do you think that that's ultimately down the road something that Ginny Rometty will do, or that some activist investor is going to force her to do?
I think boards these days, as you well know, Susie, are always thinking about activism, at least in some way. The case to be made by IBM for why we should not do that is because we already have. And I asked Ms. Rometty about it. I mean, they've already gotten rid of their PC business. They've gotten rid of, with today's sale, the chip business. They've gotten rid of their low-end server business. So they would argue what we really are is simply an enterprise technology company. We provide technology services to big businesses, and they want all the things that we have, so why would you separate them? That said, this is a behemoth. 430,000 employees. And so moving it quickly in what everybody argues is a faster moving environment can be difficult. That was going to be my question here. This is a big, big company. Can it be nimble enough in today's world of cloud computing? A game, by the way, that where I think most people would say they're already playing catch-up. Yeah, I mean, you know, we think Amazon Web Services, we think of other names when it comes to that, although they have $4.4 billion in revenues. But off of a $100 billion revenue base for the company, or a little less than that at this point, even when you're growing more quickly, Tyler, it takes a long time to really turn that around. Today's problems had to do with, well, software to a certain extent, and the services business. She said they didn't execute as well as they could have in sales and software. That gets to the point of Are you not agile enough? Remedi would say no. In fact, she did in our interview. That is not the issue. But many would argue, well, you've got a lot of smaller, more agile competitors.
I know you talked to her about Warren Buffett, and we just reported that he lost $1 billion today alone from this big sell-off. What did she have to say about Warren?
You know, she wouldn't specifically answer, Susie, in terms of whether she spoke to him or not. One would have to assume she did, as she might have talked to many of her large shareholders, certainly did today. Before the news, unclear how many you really do talk to. But Mr. Buffett was quiet. When CNBC reached out to him, he did not offer us, I believe, any comment, as far as I'm aware. He is still a large shareholder there. There's no reason to believe that is not going to still be the case and that he is not supportive. But I will be curious to see the next time he speaks publicly about IBM.
All right, David, thanks very much.
Okay.
Appreciate it. David Faber reporting. Later in the program, one of our Market Monitor guests who recently recommended IBM is back to defend his call and explains why he still thinks it's a buy. Well, 9 months into his role as Microsoft's CEO, only the third one in company history, Satya Nadella spoke exclusively with our John Fort. Nadella talked about how well-positioned the company is in the $100 billion cloud computing market, which has become a battle between a handful of tech giants.
I think that if you're not already spending a lot of capital in the order of $4 or $5 billion each year to just grow your cloud, probably it's a little too late to enter the market. I mean, that's the entry barriers, and there are a few of us who are in that mega scale of cloud.
So that's the cost of entry. If you're not prepared to spend $4 or $5 billion a year, forget it.
I mean, that's the rated wage. I mean, it's the same thing. You know, if you're a network operator today, you have to be in that business, and if you're a mega scale cloud provider, you're already committing a lot of capital. In our case, we've been committing it for multiple years, and we're not alone. There are at least 2 other players like that, Amazon and Google in particular, but we are one of the 3 in that category.
Nadella also waved off investor calls for Microsoft to split up, separating its consumer software business from its enterprise and cloud division, saying its customers use the same products at home and at work.
Another tech giant making news tonight, Yahoo. The Wall Street Journal reports that Yahoo will unveil some cost-cutting moves, likely including job cuts, as early as tomorrow. That's when it reports its quarterly results after the market close. The company's also expected to lay out plans for acquiring some tech startups, using part of the nearly $6 billion it made from selling shares it owned in Chinese e-commerce giant Alibaba. And coming up on the program, why the head of the FBI thinks companies like Apple and Google are putting privacy protections ahead of public safety. That's next.
Well, despite besides posting some caramel-covered earnings after the bell, it was a huge day for Apple, which launched its Apple Pay mobile payment system today, hoping to replace your wallet with your iPhone. Josh Lipton shows us how Apple Pay works and how the rollout went.
The next time you're shopping for groceries, you can leave your wallet and credit cards at home. That's Apple's hope as it officially launches Apple Pay, its new mobile payment service that allows users to buy goods with their smartphones. Users walk up to the front of a checkout line and hold up their iPhone 6 or iPhone 6 Plus to a special reader. Then, by simply pressing the fingerprint sensor, that transaction is completed.
Taking out your credit card and swiping is pretty easy, and we wanted to make something that was even easier than that.
With this new service, Apple is trying to capitalize on the mobile payments market, which will quadruple to $90 billion by 2017, according to Forrester Research. The fast-growing market is attracting a lot of attention from tech giants, including eBay's PayPal, Amazon, and Google. Apple hasn't disclosed how it intends to monetize its new service, but it already boasts an extensive network of partners at 220,000 locations, including Whole Foods, McDonald's, and Macy's. Apple Pay does face some challenges, like convincing more merchants to adopt the technology, and some industry analysts are cautious about its mass appeal.
It's very easy to conduct transactions with credit cards, debit cards, with cash. You don't need a battery to be able to do those types of things, and so just some of those characteristics are kind of what Apple Pay has to contend with out there. It has to contend with kind of ingrained consumer behavior.
It's faster and easier.
Apple's Eddie Q disagrees with that analysis, arguing that Apple Pay will prove popular because it's much faster than traditional payment methods and it's also more secure. Here's why. A unique 16-digit security code is created each time a consumer authorizes a new purchase. That one-time code, if intercepted by hackers, can't be used for another transaction. Apple's executives are clearly excited about Apple Pay, as are financial analysts who see it as a potential new source of revenue for the company. Now we'll wait and see whether consumers are equally enthusiastic. For Nightly Business Report, I'm Josh Lipton in Cupertino, California.
But Apple, along with Google, have now found themselves in the crosshairs of the FBI. It's all about new encryption technology that may make it harder for investigators to do their jobs. Eamon Javers has the story.
In April, Brian Horn was sentenced to death for the 2010 killing of a 12-year-old boy he had kidnapped. It's a conviction the FBI says was won in part because law enforcement was able to read text messages on Horn's phone. Now, FBI Director James Comey says Apple and Google's just announced default encryption could keep the police from capturing criminals like Horn. The companies say the new system will mean Apple or Google might not be able to fulfill a legal warrant for access to a suspect's phone. The director of the FBI says that is dangerous.
We need assistance and cooperation from companies to comply with lawful court orders so that criminals around the world cannot seek safe haven. We need to find common ground. We care about the same things.
And the FBI director said Congress may just have to force American companies to accept lower profits in the name of security.
Now, where we may get is to a place where the U.S., through its Congress, says, you know what, we need to force this on American companies. And maybe they'll take a hit. Someone in some other country will say, we sell a phone that even with lawful authority people can get into. But that we as a society are willing to have American companies take that hit.
One former federal prosecutor underscored Comey's point, saying criminals can be incredibly boastful online, leading to a treasure trove of evidence.
They can have photos with their co-conspirators or with bricks of cocaine or with piles of money, so that can be useful. The contacts that this guy works with and for will be on his phone. IMs, instant messages, where he's maybe working out with another co-conspirator where they're going to do a pickup or where they're going to meet.
But civil libertarians argue the FBI is asking for too much.
Well, I don't think that his argument was particularly convincing. What he's talking about are a few outlier criminal cases, and it really doesn't justify the vast invasion of privacy to the general public and the potential security implications of what he's saying. What we've seen come out over the past few years with these revelations from Snowden and others is that law enforcement has really been abusing its capabilities.
Comey said he doesn't know exactly what the technical fix here ought to be, but he did say that he thinks that the post-Snowden pendulum has swung too far in the direction of privacy and needs to swing back toward law enforcement. For Nightly Business Report, I'm Eamon Javers in Washington.
A warning from Chipotle put a damper on its earnings report, and that is where we begin tonight's market focus. The Mexican fast casual chain saw sales soar in its latest quarter with results that topped estimates. But the company did warn that sales growth may slow down next year, and that sent shares down initially after hours. During the regular trading session, the stock was almost 2% higher to 653.03, but you see the slide after hours. NCR saw its shares tumble after its outlook disappointed investors. The company, which makes point-of-sales devices and ATMs, cut its guidance for the year, citing weakness in the retail industry and fear over customer security data. And shares off 21% to 23.54. The toy maker Hasbro said strong sales growth in its boys division, which includes Transformers and Marvel toys, helped its quarterly results. Earnings topped estimates, revenue in line with what the forecasters thought. Shares popped about 5% to $56.51. And VF Corp, the parent of North Face and other clothing brands, reported results that missed slightly on both the top and bottom lines. Despite that, the company raised its profit forecast for the year, hiked its quarterly dividend 22%. Shares up 20 cents. They finished at $63.96.
Sears has a new plan to raise cash. The struggling retailer said it will sell $625 million in debt to stock owners. This is the third time in about 2 months that CEO Eddie Lampert, whose interests will participate in the offering, has agreed to pump funds into the company. Shares surged 23% to $34.96. Shares of Trinity went the other way after the company was found guilty of making false claims to the government. A jury found that the guardrail maker deliberately withheld information about cost-saving changes to its highway guardrail systems that made them more dangerous and defrauded the government out of $175 million. Shares fell 12% to $31.63. And Russia has broadened its crackdown on McDonald's. The fast food chain says that almost half of its locations in Russia are now under government investigation, and a regulator has already closed 9 restaurants in recent weeks. We're going to find out more about all of that when the company reports earnings tomorrow morning. Ahead of that, though, shares rose 55 cents to $91.59.
Coming up, if you own shares of IBM, what should you do with them? One of our Market Monitor guests who recently recommended the stock is back to answer that question and more. AbbVie and Shire have called off their $54 billion deal because of new rules put in place by the Obama administration to curb so-called inversion deals. As a result, AbbVie will pay Shire a breakup of more than $1.5 billion.
More people are getting hired, but they're not getting more money. A new survey by the National Association for Business Economics found that only about a quarter of companies surveyed raised employee wages during this summer's third quarter. That's down from 43% in the spring quarter. The survey also found that just 1/3 of those companies say they plan on boosting wages in the current quarter. Well, there are still many believers in Big Blue despite the big sell-off in IBM stock today. One of them is our market monitor, Charlie Bobrinskoy, who came on our program 4 weeks ago and recommended IBM when it was trading at $194. Today, he still stands by that call and is here to tell us why. He's vice chairman and portfolio manager with Ariel Investments. Hi, Charlie. Nice to have you with us.
Thanks for having me on.
Okay, so don't want to put you on the spot, but there may be many viewers who are watching the program and based on your recommendation bought IBM stock at $194. What would you tell them today of what to do with their shares?
Well, it's a humbling day. Warren Buffett and I, unfortunately, are both big investors in this stock, he much bigger than me. But clearly, it's been a wonderful stock for us since we bought it in 2005 at 77. More than doubled since then, and people have always hated IBM, but clearly the last couple of quarters they've missed expectations, including my own. So I did not see this hiccup coming. A very soft quarter. In fact, I think even management didn't see this coming. The month of September was weak and disappointed all of us.
But what are you supposed to do if you bought it at $194? Do you sell it today?
Yeah, unfortunately, this is a hard part of this business, and it's always fun to have stocks that are going up. Lots of people like to buy stocks that are going up. In fact, the opposite is the best thing to do. It's the best thing to do is to buy low and sell high, to buy what others are selling. The stock is cheaper today on an absolute value basis. It's trading at about 10 times forward earnings. Very cheap valuation in a market trading at 15. So we would say it's not a good time to sell. The company is still a leader. Their U.S. business is actually doing fine. Most of the problems they had today were in China and emerging markets. and those markets have slowed.
So not a good time to sell. I know that you really can't tell us what, if anything, you have done with your particular shares. It's been a long time holding of yours, but after an earnings report like this, what kind of a post-game analysis do you go through with an eye towards deciding what you're going to do with this holding and whether you've gotten all of the profit out of it that you can reasonably expect for the time being?
That's the right question, Tyler. And what you have to do is take a step back and look fresh and make sure you're not using your old valuation analysis, that you're not locked into the past. And ask yourself a question of, if I didn't own it today, would I buy it today? And the answer to that is absolutely yes. At this valuation, this is a company that's a leader in the whole field of big data. The Watson computer that's so famous that wins Jeopardy puts them at the forefront of analytics. Their software is embedded at many of the largest, most of the largest companies around the world. There is a change going on that people are leasing software instead of just buying it, and that puts pressure on earnings, but it's something I would buy today if I didn't own it.
All right, well, that's a very interesting perspective on it. Thank you so much, Charlie. Charlie
Thanks for having me.
Bobrinskoy with Ariel Investments.
And finally tonight, it was 27 years ago yesterday, October 19th, 1987, Black Monday, worst day ever for the Dow. It lost 22% of its value one session. It set off, of course, a panic on Wall Street. The equivalent now would be a drop of 3,700 points in one day. Remember it well.
So I looked it up. The Dow was at that time closed at 1738, lower than where the S&P is today.
All right.
All right. That's Nightly Business Report for tonight. Thanks so much for watching. I'm Susie Garrow.
I'm Tyler Matheson. Thanks from me as well. Have a great evening. We'll be here tomorrow night. Hope you will be.
Yeah, look, 7.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garrow with a Nightly Business Report news brief. Strong earnings late today from Apple. It easily beat forecasts thanks to sales of more than 39 million iPhones and the best ever quarter for sales of its Mac personal computer. All this comes on the same day it unveiled its Apple Pay electronic payment system. A different story at IBM, which missed Wall Street estimates last quarter on slowing sales of hardware and software services. Shares of Big Blue tumbled 7% today. That weighed heavily on the Dow, but with oil prices stable and Ebola worries subsiding, the blue chip still managed to gain 19 points. The Nasdaq was up 57, the S&P added 17 points. And federal safety regulators are urging owners of nearly 5 million cars to get their recalled airbags fixed. Be sure to tune into Nightly Business Report right here on your public television station.